You are live. All right. How do I flip this camera? Front camera, back camera. All right. All right. Let's do this.
All right. All right. Hey, what's up, everybody? Today, I'm going to give you just a brief overview of the roadmap that I'm going to take you. First of all, I want to introduce myself. My name is Nick. I'm a teacher and I'm a trader. And I really believe in teaching everybody what it takes to trade like a professional. And this is how I'm going to do it. Number one, trading can be overwhelming at first. So if you take a look at this whiteboard, in order to be successful, you got to know the math, manage your money, and focus on your mindset. Because without your foundation, without actually knowing what it is that your strategy is built on, it's easy to get off the path and lose focus because there's so much information out there. And that's why I feel like I'm going to give you the step by step roadmap so that you can be able to trade without gambling. So, what we're going to do here is we're going to use the math and create an edge using probabilities to turn them into profit. And we're going to do this using the markets because there's no other place in the real world where you can actually put your math to work from theoretical to experimental. And what do I mean by that? I mean, when you're actually looking at theoretical probabilities, that's all math related, right? Because probability is just a math equation. And if you think about wealth and money, everything is a math equation. It's what are you going to put as your input and what are you going to come out as your output? If you put in the right input, which is picking the right stock, picking the right strategy, picking when to get in, when to get out, those are all inputs, right? And then the output is what actually happened. And so with math and money, math is the theoretical. Like, let's say you roll a dice, you have 1 in 6 chance of rolling a six, right? Same thing with trading. If you actually pick a certain strategy that has a probability, it either is going to happen or it's not. So, in order to actually be successful, there's one big question you always want to ask yourself, like, what's the big essential question? How can I use math to create an edge to actually give us the advantage, right? We want to be the casino. We want to be the house because there's always a saying that the house always wins. And the reason why the house always wins is because they have a mathematical edge where they have a greater than 50% chance in their favor. But like we all know, anybody can win on any given day, any given game, right? You could win a hand of blackjack. You could be hot for the day. But the casino has the edge because they have the law of large numbers on their side. What do I mean by that? I mean, they have thousands and thousands of people betting. And yeah, some people might win, some people are going to lose, but the majority of people are going to lose. And that edge, that 52% edge or that 55% edge, is going to play itself out over the law of large numbers. And that's how you have to think of trading and investing in anything in life, right? Anything can happen in one or two occurrences. But if you do enough occurrences, then the theoretical probability will come close to the experimental probability. So, first thing you need to know is you got to know the power of exponential growth, the power of money, because without knowing the goal in mind, without knowing where you're going, what the end goal is, it's easy to get off the path. How do you know if you actually achieve your goal? How do you know if you actually are on the right path, right? It's easier to then get diverted, let your emotions get in the way, let a new strategy or new system confuse you even more. So, first, you got to know percentages. What is a decent rate of return? Am I looking for a 10% return, 20% return? And how long is it, for a year, 2 years, 1 month, right? The thing about trading is that you can get any type of return in the market you want because there's opportunities in a year, in a month, in a day. There's strategies using leverage like options, futures, all types of strategies. The only thing that prevents people that actually use those strategies is the education, right? They don't teach this to you in school. They don't give you a clear roadmap. You try to go look for it on YouTube, and there's just thousands of grifters and people out there just giving you nonsense. My goal is to give it to you in the simplest way possible so that you know you have a strong foundation that's based in math. So, first, you got to know the power of compound interest, which is nothing more than an exponential formula, right? If you guys know about simple interest, it's linear, it just goes with a constant rate of change. You're just making 50 bucks every month. But if you know about compound interest and how that money grows on top of itself like a snowball, this is how you actually create wealth. And this is the first milestone that you have to understand is what is my expected rate of return? And a quick formula is the rule of 72. If some of you guys probably heard that, rule of 72 just tells you how often your money will double depending on your interest rate. So, for example, let's say you're earning 8% interest rate a year or a month, right? It doesn't even have to be a year. It could be a month, it could be a day, depending on whatever strategy or market you want to trade. So, if you're making 8%, divide 72 divided by 8, that means your money's going to double every 9 days, 9 months, 9 years, depending on your time frame. So the rule of 72 is basically you take 72 divided by the rate of return, and that tells you approximately how long it's going to take your money to double. And that could be in any time frame. So that's step number one is your first milestone is understanding what is your goal, starting with the end in mind. Then step number two is the framework, right? We're going to use math and what's called the expected positive value. And that's very easy to explain. Let's say, for example, I'm going to come over here. And let's say you have 10 trades, right? You want to make sure that over 10 trades or 100 trades, taking account all your winners and your losers, that you have a positive expected value. So, for example, let's say you have 8 trades and you make $100 per trade. That's $800, right? But now we need to account for our losing trades. That's where most people ignore. They don't know how to manage their risk. They don't know how to manage their losses. But any professional knows that they need to account for losing trades. So let's say you have 2 losers. So you're right 80% of the time, you're wrong 20% of the time. And in those cases, you lose $300, meaning you actually lose more than what you make. But since you only lost 2 trades, that's $600. So your positive expected value is $200 every 10 trades, meaning you can expect to make $200 after every 10 trades. But if you want to go even more specific, since we placed 10 trades, you just divide that by 10, and that gives you an expected value of $20 per trade, which means that on average, every trade you place should make about $20. And that's what I'm going to teach you when you get into options trading. Because options trading, if you can learn how to sell options and collect what's called extrinsic value, let me just quickly show you what extrinsic value is. If you sell, let's say $1,000 worth of extrinsic value, right? We can expect to collect about 25% of that extrinsic value, which is $250. What do I mean by that? That means when I sell premium, I'm not expecting to collect the entire premium. I'm going to teach you a strategy where you can actually sell premium, buy it back for cheaper, take your risk off the table, and at the end, accounting for your losers, you will collect about 25% of whatever premium you collect. This is what's powerful about education and knowing what we're actually doing, right? A strategic approach that takes the emotions out of it because trading is nothing more than a process and managing risk. Most people are gambling. That's why people lose money, right? But the wealthiest companies in the world, they're not gambling. They are playing probabilities. They are using math on their side, just like an insurance company, right? We all know the wealthiest companies are insurance companies. and casinos. And basically, their business model is based in math. So everybody here has a probability of dying, right? The unhealthier you are, the higher probability that you're going to die, right? If you're a smoker, then your life expectancy is going to be maybe 60. It's called the mortality rate. There's actually an actuary table that lists how much premium you should pay depending on how risky you are, because it's all based on risk and probabilities and payouts, right? So if we know that everything has a probability tied to it, we can actually create a business off of probabilities. And it's actually a business of selling probabilities because that's what casinos do, right? They sell you all these games that to go play these games, but the probabilities are on their side. You, as the gambler, have the probabilities going against you. That's why most people lose. So once you understand how the probabilities work, I'm going to give you the framework where you actually can create strategies like you are the casino. So you are the insurance company. And that's what this project is going to entail is that you guys can create a project where parents are going to come in here and people from the board are coming here and each station is going to teach them how can they manage their money so that they're having their money work as hard as they do, right? Because we all know money can work 24 hours a day, whereas you can only work 8 hours a day, right? And there's a limited amount of money that you can make working. But if you have money working for you, meaning if you know how to have it invested in the right place with the right strategies, now you can have your money work for you. That's how the wealthy in America, the wealthy all over the world, they know that. They know how to make money work for them. They can live off interest. They can live off their returns. And that's the goal. That's the main goal is how can I make my money work hard so that I don't have to work hard for it, right? So the next milestone you're going to do is once you understand the math, then you're going to understand the probabilities. Then you got to figure out the patterns, right? Because patterns are nothing more than the psychology of people, right? When things are low, they want to buy low. When things get high, they want to sell high, right? That's all based on supply and demand. There's only one law that everything falls under. It's the law of supply and demand. When there's more supply, things are going to go down. But if there's more demand for anything, it could be a demand for bread, it could be a demand for anything, PS3s, PS5s, that's going to drive the price up. And if you know how to get in before the demand actually increases, that's kind of like predicting the future. We're using price and patterns to predict the future. We're trying to predict when demand is going to increase, and then we take advantage of that. So that's milestone number 3 is how to use patterns to make predictions. Combine that with probability. So we all know you're going to learn about the probability curve. And this is kind of like a normal distribution curve where we all know when you're in a classroom, right? 70% of the students are going to typically get between a C average, meaning 70 to 79%, right? One standard deviation, typically you'll get about 67% of the class within this range. Of course, there will be outliers. The outliers are the few people that get an A plus, right? They just get automatic A's, they're super smart. And then there's outliers that maybe fail the class. But these percentages are maybe like 5%, 5%. And we know everything has to equal 100%. And so if we can use probability analysis and the curve, we can actually predict where price of a stock will trade within. And instead of trying to predict where the stock will go, as a business, you actually have higher probability when you can predict where the price will stay in between. So I'll teach you how to trade ranges, not where it's going to go, but the range that it's going to fall in between. Or even yet, how about we sell these bets? And as long as the stock stays outside of the range, then you win money, right? These are strategies that are not that complicated, but I'm going to simplify it for you. My job is to make the complex simple so that anybody can do it. And more importantly, simple so that you can repeat it. Because the more complex something is, the more it is for you to mess it up. Because there's so many pieces, right? Paralysis by analysis. But if you keep it simple, KISS stands for keep it simple, stupid. That's me. I'm not the smartest guy in the room. But if you show me a blueprint, a formula that's simple, that anybody can follow, then I can do it. But more importantly, you need to have the confidence in the system because if you don't know the why behind it, the theory of why the strategy actually works, then it's easy for you to deviate. But if you actually have a solid foundation that is rooted in math, rooted in probabilities, that gives you a better chance to trust the process and the system to let the probabilities play out. Make sense? And then the last milestone is how do you actually manage a portfolio? And this is where most people have the theory, but they can't apply it, right? Because knowledge by itself is worthless. You can know how to lose weight, but if you can't apply it, then it's useless. The only power is when you apply the knowledge, right, with application. That gives you true power. If you can actually know something and then apply it, that's when it becomes useful. That's when it becomes powerful. And a lot of people, they can't do it on their own. Just like somebody who's trying to lose weight or trying to go to the gym. Most people need a coach, right? They need a coach, somebody to help them keep accountable, making sure they're eating the right foods, making sure that they're motivating them to keep accountable. And that's the same thing with finances. There's a whole industry out there of coaching. It could be coaching health, it could be coaching your career, it could be coaching your money. So that's where I bring the value is I'm going to coach you. I'm a teacher, right? A teacher is nothing more than a coach that guides them along the way, knowing exactly where they want to take them and then giving them the steps, the clear blueprint and the motivation so that learning becomes fun. It's not something that's just boring and you just learn the theory. What's great about probabilities is that you actually can take the theoretical probability of math and then apply it and do what's called the experimental probability, which is actually letting the probabilities play themselves out and you actually see results. And hopefully, when you sell the probabilities, you can actually turn them into profits, right? And that's what all businesses are, right? They're in the business of making profits. And as long as the income is greater than the expenses, then you're going to be net profitable. So, in the end, the ultimate goal is to get financial freedom. That's what everybody wants, but it's very hard to attain because financial freedom is when your expenses, right, and your passive income. And when I say passive income, this is income that comes from real estate, in investing, any way where your money is working for you, this is called passive income. But if you have to work for your money, that's what's called a job, right? You can't really get financial freedom from a job. But if you can learn strategies and techniques to actually create passive income, and if this passive income becomes greater than your monthly expenses, then that is financial freedom because guess what? Now you don't have to depend on a job, but there's always risk, right? This is where most people fail is because they don't understand the risk. But some people say the biggest risk is actually not taking one. But when you do take the risk, it has to be calculated risk, it has to be an educated risk, and you have to be willing to be wrong and minimize the risk. So those are the three most important risk factors, right? And they say the best investment is always the investment in yourself. You got to invest the knowledge, the education, the tools, invest in yourself, and that will always earn the best interest. And that's what I want you guys to walk away with, right? That's what this math class is all about, is to how do you make the math tie it into the money to create a better life, create that edge that you need? So instead of you being taken advantage of by people charging interest on you, you can now use the power of returns and interest in your favor. And that's pretty much the project that you guys are going to be working on, and making sure that you guys break it step by step, each milestone, so that at the end, you have motivation to actually learn this stuff using statistics, data analysis, patterns in a way that's simple and easy to understand. So, with all that being said, we have 30 days, and I believe anybody can do this within 30 days. You don't need a whole year. If you just focus on just the right things, you can do this. And so the next 30 days, I'm going to break it down lesson by lesson, give you guys examples, give you guys worksheets that you guys can do, play around with the numbers, and then at the end, you'll present it and create a high probability trading system, a business where you could do it yourself, and you only need $5,000 to start with. You don't need to have $100,000 like you do trading stocks. With options using leverage, you could actually start off with as little as $5,000 and earn about 5% return a month. That's crazy, right? Instead of waiting a year, you could do it monthly. And that's how you generate income and build wealth over time. So I hope to see you guys in the next video. And hopefully, if this motivates you, subscribe, and I'll be bringing you guys new content every day. Peace. What do you think, Danny?
Good job. Good job. Let's see here. And